G'day taxpayers. RBA statement on monetary policy out today, and if we look at the forecasts there, we've got a really interesting array of views from the bank. It's putting a huge amount of emphasis on the fact that productivity growth is going to remain very weak because it's forecasting GDP growth just to muddle along no faster than 2% in annual terms over the forecast horizon. Even that really tepid rate of economic growth is still going to be creating enough jobs to keep the unemployment rate at a little below 4.5%. So where it is now, they're actually forecasting the unemployment rate to sort of err on the side of slightly lower than we are today, despite the economy remaining pretty sluggish. Amid all of this, it's got inflation staying high. Obviously, it had to revise up the inflation projections from last time because of the September quarter result, but it's still expecting the underlying inflation, trimmed mean, whatever, hovering around about 2.6, 2.7% towards the end of the forecast horizon. And I know the governor quite rightly said the further you go out, the more uncertainty there is about the forecast. Some might say even try to forecast the current quarter is pretty difficult, how we all went in the September quarter, including the bank. It's really saying that they're not inclined to think that we're going to be getting good news on inflation at all over the forecast horizon. We're going to get pretty disappointing news on economic growth, important for the business sector, and we're going to get decent news on the labour market, albeit with wages growth coming back to a 3% pace. So for the here and now, and it's fairly clear from the RBA, at the moment they've got no inkling, no intention, no whiff of wanting to adjust interest rates, either up or down. So I think it's fair to say that even though there's a strong case on activity, on unemployment grounds to be cutting interest rates, there certainly is, they're not going to do anything until, well, into next year. So look, as we see from the RBA, they can change their mind as the data comes through. So perhaps over the course of the next couple of months, if we get the unemployment rate at 4.6, 4.7%, if we do get confirmation that the September quarter inflation blip was just that, a blip full of anomalies, and that we get a low result in the December quarter, I'd say a 0.5% or something is would trigger that assessment. Then it's all bets off, and that we move to the February meeting of the RBA board, and the rate cut will still be on the table. But for the here and now, obviously, I've put too much weight on the weak economy, rising unemployment. In my view, that the rates should be cut. So to that end, I haven't got it right. I've been wrong. But we'll see what the RBA does. And again, I'm not relying on the RBA forecasts. I look at them to sort of see their pattern of influence. They've done a complete about face on where the labour market is and where inflation is. Interesting times ahead.